around half its value since it previously reached a peak in October last year, even falling below $60,000 last week. The slide comes despite US President Donald Trump's efforts to create a more crypto-friendly environment since taking office, even saying that he wants to make the US, quote, the crypto capital of the world. Well, for more, we can speak with Marcus Thielen, founder and CEO of 10x Research. Marcus, help us understand what's going on then. We know Bitcoin can have huge swings. What do you put this down to?
Well, I think it all comes down to interest rate expectations. When we look back into October, what has happened? The market was pricing in more than 2 interest rate cuts by the US. And of course, those interest rate cuts have been priced out over the last couple of weeks and months, and especially since the Iran war, and especially since inflation expectations have actually been rising over the last few weeks. And I think that's the key driver here, because over the last 6 years, and notably with the introduction really of the Wall Street investors through the Bitcoin ETFs in January 2024, Bitcoin is more and more sensitive to inflation, to expectations around inflation and what the Fed actually does. And since the May 12th CPI report, when inflation went to all the way to 3.8%, and we are expecting another inflation report, of course, in 2 days, the Bitcoin ETFs have actually sold $5.4 billion in literally less than a month. And I think that huge outflow has initially really brought down Bitcoin since the October level, but also caused another wave over the last couple of weeks, basically.
Yeah, so Bitcoin is, from what you're saying, sounds like it's gone so mainstream that it's now reacting like a mainstream asset.
Yeah, that's absolutely correct. Bitcoin is a Main Street asset because the key drivers is not retail. The key drivers are institutional investors, and they primarily base their decision on the cost of capital. And the cost of capital is, of course, set by the US Fed predominantly. So if interest rates go up, that's usually a way to fight inflation, and that's negative for Bitcoin. And if interest rates go down, or if the Fed is dovish, then usually the money comes in and pushes Bitcoin up. And really, since October, there has been a clear shift in expectations of rate cuts initially that has been priced out, and now there's expectations of rate hikes. And that is, of course, a second wave that is negative for Bitcoin, and that's why we have been selling off. Of course, the market is focusing on some of the buyers that we know, for example, MicroStrategy, a company that accumulates Bitcoin, but they have also been stepping back, and the market is focusing really on the stepping back, but the market is not really understanding that really it's the Bitcoin ETFs that are really the selling force here and that are really pushing the price down. And as long as interest rates are expected to go up, as long as inflation is expected to go up and stay high, it's going to be a headwind for Bitcoin, and we might go down for another couple of months.
Marcus, thanks very much for your thoughts today. I appreciate that. Marcus Thielen, founder and CEO of 10x Research.